Let's find some day trades, swing trades, and option trades. Traders, it is Wednesday, May 27th. We are 3 hours into trading. Market's given us a little bit of a curveball today. Really wanted to open higher, and then it reversed instantly right out of the open. But before we do that, I want to show you this really nice bullish cross on the 10p indicator that told us that the market was ready to bounce. You can see how it's rallying up, and now it's getting ready to cross over. That would be a bearish cross. You can see how the S&P 500 is starting to wane a little bit here. Would I get short right now? Probably not. I'd like to draw an upward sloping trend line on M5. I would need to see a technical breach, but it does look like we've got some tails above body here, and we're starting to see some softness. Now, I'm going to go into that chart. We could take a look at a logical level where we might want to get short. This is the low from yesterday. That definitely should be a support level right around that 299 level. We go into the daily chart now and we take a look at what's happened here. You can see how we've tried to get through that 200-day moving average yesterday. We sold off after the initial rally and we rallied right back up to it, but still had a red bar. Today we gapped higher, and again, we're starting to see major resistance at that 200-day moving average. So I think the market's going to run into a little bit of a problem here trying to move higher. We've had everything it could possibly want right now. We've got a lot of optimism by consumers. We had a lot of people out this weekend, from my observations, spending money, getting life back to normal, perhaps not social distancing as much as they should, but I feel that there is a lot of pent-up demand. We also have fiscal stimulus coming from Japan to the tune of $1.1 trillion. Mitch McConnell is talking about another round of stimulus from the U.S., so we've got that. We also have the EU borrowing around 800 billion euros, so there's going to be stimulus there as well. There's a safety net under the market right now, and that's what buyers are leaning on. They know that if the recovery doesn't happen quite as quickly as we'd like, that the governments and the central banks are ready to keep spending. They're ready to keep printing money, whatever it takes at this stage. So, with that backstop, asset managers are erring on the side of being long, and they know that interest rates are going to stay near 0%, so they don't want to be in fixed income because those yields don't keep pace with inflation, so they're negative real returns. So that is all creating a bid to the market right now, but it's relatively skittish. And I say that because we should have been able to follow through today. We'll go back into that 5-minute chart and we'll go back to yesterday's action. You can see the big gap up, and then we come down, we take out the low of the day, and we close on a whimper. Today, we get a nice big gap up. We actually test the high from yesterday. Today, the selling was much more pronounced. Yesterday, it was a little bit lackluster. Today, bam, they nailed it, and they nailed it hard right away. You can see these long red candles closing on their low. Once we took out the low right here, it was apparent that we were going to go back and try and fill in much of this gap. Now, I did suggest selling an NVIDIA put spread yesterday. I am actually short an AMAT bullish put spread right now, and I'm going to talk about legging out of trades. So before I do that, I want to go back in and I want to take a look at some of the stocks that I recommended to you yesterday. I said they would be good day trades. I said they should also do well overnight. Obviously, we've had a big market decline today. So we went from 302 down to 297. That is a 50-point reversal. So let's take a look at those stocks and see how they've done. I had mentioned to you GS, Goldman Sachs, look good. Hey, not too bad. Look at that follow through from the video yesterday right about here. Somewhere in the 190 level. We're up over $206 right now, so a $16 rally. Not too shabby, especially given the market conditions. Morgan Stanley, same thing. Look at that, from $43 up to about $46. Not too shabby. Again, especially given the market conditions. Nike was another one I showed you. That's where we would have been long. That's where the stock is now. Very nice. VLO. Somewhere in here we'd be long. You can see how the stock is higher than where the video came out yesterday. Not too bad. And then finally, we had NSC. That was the final one that I had suggested yesterday. Another really nice rally yesterday. Follow through, big gap up today. Able to hold that opening price so far. Really nice rally in the stock. So we did really well, especially given that the market has been very, very soft so far today. So now let's go in and let's take a look at how we leg out of spreads. And I'm going to go into NVIDIA specifically because I posted that video Monday night. And I'm going to go in and show you that stock. And the premise behind the trade, this was the price action from Tuesday, yesterday. And we were able to get filled on that spread right away on the open. And you can see it closed near its, or it opened near its high, and it spent the rest of the day selling off, and it was testing that support right there on that gap. And so my premise for this was that that $340 level, the close of that long green bar, that would hold, and that we would sell the 340 puts and buy the 337.50 puts, and that would be our 2.5 point spread, and we do that for a 40-cent credit. So the underlying premise for the trade was flawed. And once we knew that that support level right there had failed, then we knew that the stock was likely to come back in and challenge that horizontal support now. Used to be resistance, now it's support, and that's exactly what it did this morning. So if we want to adjust our spreads and we want to leg out, we have to have a few things playing in our favor. First of all, we had this major breakdown right here at about the the 348 level. Those were the two prior lows. So we gapped down below that. That's not good. We took out that 340 level with ease. So I'm going to go into the 5-minute chart. I'm also going to back this up a little bit so that we can look at what was happening this morning. And here's how I leg out of a trade. I have to have both things working in my favor. So this is very, very important. I have to have relative weakness in the stock, and I have to have a technical breakdown in the market so that I know that I'm going to have sustained follow through. Most of today's lesson is going to be showing you how to leg out of spreads. I don't do it often because I have to have the perfect environment for it. So in this case, you can see how the stock sold off hard and it went right through that 340 level. Uh-oh. That's when I knew I was in trouble on this trade. However, I didn't want to just buy back my 340 short put because I didn't know what the market would be doing right away. So I thought I better wait and see if this low right here is taken out. And if it is, then I know that I can buy back my short put, the 340 put, and I can try and sell the 337.50 put for the same price. So in this case, these long green candles closing on their low told me that we were in trouble. We had a little bit of a bounce right in here, but you could see the 10P indicator was peaking and it was crossing over right there. That was a bearish cross. When I saw this, I told everyone in the chat room, I said, hey, this was a very brief and very shallow bounce after long red candles closing on their low. We're going to at least test the low from yesterday. And this is where I started to get short. Actually, I bought back my 340 puts on NVIDIA. Hence, I'm only long the 337.50 puts. So I'm, in essence, short the stock. And as the stock came in, I was able to exit that bullish put spread. But I sold my puts for 40 cents less than I paid for the short puts that I bought back. So in essence, that trade was a scratch for me. These option bid-ask spreads went crazy. They were $1.50, $2 wide. So I didn't want to risk a whole lot on this. I knew I had two elements working in my favor. Number one, I had relative weakness in the stock. It had broken a key technical support level that I was leaning on. Typically, when those support levels are breached, then the stock is going to follow through in that same direction here, the direction being down. So that support is breached. I know that I've got more downside in the stock. The second part to the equation, very, very important. I knew I had market weakness, so I had that tailwind also helping me. I have to have both conditions, absolutely, or you do not leg out. And so, as the market sold off, I was able to hit my target price and scratch a bad trade. So that's how we leg out. Now, if by chance the market had sold off and the stock had found support, I've got to close it down right away because I'm going to be taking a lot of risk if I leave that long put out there. So all of this has to happen within the same day. I like to do it early in the morning because then I've got a chance for the stock to cooperate. I might even have a chance for the stock to really fall apart and I can actually make some decent money legging out of that spread. But if I am not able to get out at my target price on that long put position that I still have, then I'm absolutely going to be out of it by the end of the day. I do not want to have that risk overnight. And so that's why I really want to make sure that I've got both elements lined up at the same time during the course of the day. Relative weakness in the stock and a technical breakdown by the market through a support level so that I would have follow through selling in the market and follow through selling in the stock. So I currently have another position on. I have an AMAT spread that I'm currently trying to leg out of right now. So let's go forward here and see what the market's doing. I'd mentioned to you that the 10P indicator was starting to crest, but that we needed to see a technical confirmation here. So you can see just about ready to roll over here. I would like to see it breach this horizontal support level right here. And if it can do so, then I would consider going short the market. And so now I've got my alert line set right here. So while we do the presentation, we'll be able to see. Now I'm going to go into AMAT. And in this particular case, I bought back the $54 put and I paid $1.10 for those. And I'm looking to sell the 53.50. These expire Friday. I've got the stock bouncing, although it's been weak relative to the market. And you can see how the stock was compressing while the market was going higher. So we're going to that daily chart, and I'll show you a more classic example of what happens on these spreads. My underlying premise for this stock was that that 200-day moving average was going to hold. This is a major support level, and so I felt comfortable selling the 54 puts that were below the 200-day moving average and buying the 53.50 puts, and I did that for a 10-cent credit. Now, as this technical support level is violated, I've got weakness. I know that this stock is weak and it wants to go lower because it's been able to breach that technical support. So when I buy back that $54 put, now I have the 53.50s and I am bearish the stock. So I've basically flipped from a neutral to slightly bullish position in the underlying to an absolute bearish position. It's pretty hard to get me to flip, but what gets me to flip is relative weakness. You can see how the stock's been fading even when the market was going higher, and the fact that it's through a technical support level. So this stock looks a little bit toppy to me, and it looks like it's got some more downside. I need the market to roll over right in here, and then those 53.50 puts will start kicking into action. But you can see that right now I've got the stock starting to lift off. And I have to be very, very careful in here. So I'm going to set an alert line. I don't want this to run away from me. I don't want this to turn into a big loser for me. So I'm going to set an alert line right here at the opening of that last long red bar. And if the stock gets through that, I'm probably going to have to just shut it down and move on, take my lumps. So we've had a really good run with a lot of bullish put spreads week after week after week since the lows that we saw in March. But the market feels like it's getting a little bit tired right in here. There's a lot of excitement over the economy's getting restarted. But I feel that stocks on a valuation basis are ahead of themselves. They're due for a letdown in about another month and a half when Q2 earnings start coming out. Almost every CEO that provided commentary said Q2 is going to be worse than Q1. And right now, the market is factoring in a full-blown recovery, that everything gets back on track very, very quickly. I don't know that that's going to happen. We still have a lot of states that are still in a shutdown. You can see here how the SPY is compressing right here and we're starting to get through that resistance level. This was a very long green candle. This was a tell early in the day. We had this nice little bounce right here. Everything's fine. Then we get this long red candle, and we almost get down to the low. And it was very suspicious. It looked like, wow, here we go. We could see another red bar and test that low of the day, but we didn't. We had this little green bar right here. This was the most telling bar of the day so far. This monster long green candle closing on its high told me that the bid was still very strong and that there was some upside. So we'll see what happens in here, but you're seeing some selling pressure off of this high at the 302 level. We've seen it 2 days in a row now. That should be some pretty stiff resistance. So we'll see how the market plays out. We are above the 200-day moving average. So even though we've had, and there's my AMAT alert, that's what that would look like. So now I would know that I need to close that trade down. I'm going to conclude my video and then I'll deal with the trade. But there's a chance, good chance, that that's going to be a loser unless the market rolls over and starts to take out some support here. So let's go in and take a look at the market one more time and let's see if we can find some trades. We've got this 200-day moving average that's providing resistance. However, we are above the 200-day moving average and we do have a horizontal breakout. So I'm still going to be leaning towards the bullish side. We have to, because from a technical standpoint, I can't go in looking for short trades with the market in a strong uptrend. I'm going to click GTC. I'm going to click on this candle here, and I'm going to click on this candle here, and there's an upward sloping trend line. As long as this is intact, you can stay long the market. As long as we're above the 200-day moving average, you could stay long the market. Yesterday, I advised swing traders to buy the SPY at 300. We were filled on that. You can see we're basically at 300 right now. We are going to use a stop, a closing stop of that 200-day moving average. So if we close below it, we'll exit and then we'll reevaluate, see if we want to get back in or not. So the price action here is starting to really stall out. You can see how this part of the recovery, this part of the rally came very, very quickly. Boom, boom, boom. We got right up there. And then we've been sideways for about a month and a half. Really haven't made a whole lot of progress. That suggests that there's equilibrium. Buyers and sellers are starting to battle it out. The gains from his point on will be very hard fought, and they're only going to come on reassurance that the economic recovery is happening. So that's going to take time. We're going to need to see 2, 3, 4, 5, 6 weeks, and states are starting to ramp up their phases so that the economies are getting back opened up. In the course of the next 2 or 3 weeks, I think most states will be fully open, and then we'll be able to see what happens with consumers. We'll be able to see if there is some pent-up demand. Right now, the market is pricing it in. You've got to distance yourself from the action and find some really nice, strong stocks. So I'm going to go into the 5-minute chart on SPY. And then let's go see if we can find a couple of stocks that are performing well. We want to see some really good relative strength in here. BYND is starting to really bounce hard off of its low. BMRN was a really nice stock yesterday, I noticed, and I had gotten long that. Very, very choppy. So this is not the type of situation that you want to be in with really big volatile moves like that. What we would rather see is a stock like NSC. Nice, tight pattern. Nice, tight, 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 tight. Grind, 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 grind higher. That is what we look for. We don't want stocks with big spikes and big troughs and big spikes and big troughs. Nice, orderly price action is what we're looking for. So I'm going to see if I can find anything else in here. I'd like to find a stock that is up on the day. That's pretty nice. I'm doing my scan for the first time here. So we're going to take a look there. Don't see anything there that I like particularly. DG, Dollar General. Going to go into Pop Bull. This is one of my first stops. STNE has been very, very strong today. I don't know that company, but you can see how it's up on that 200-day moving average, so no interest there. Going to continue to just take a look down. Got a lot of retailers like Guess, Kohl's, Macy's. I'm sorry, folks. I'm not buying those stocks. I think those retailers are going to be hit so hard after a 2 month shutdown. It's going to take them forever to recover. And I think that you've seen online retailers really take a lot of their business away. And I don't know that consumers are going to be going back to the malls. I think that they're probably a little more comfortable right now buying online. So I am not going to buy travel, entertainment, retail, restaurant. I'm staying away from those stocks. Got a lot of cyclical stocks that are also starting to catch a really good bid. Got a nice horizontal breakout right there on TEX. You know, right now the banks actually look pretty good today, and they looked good yesterday, and they're coming off of some lower levels. So I think I'm just going to stick with the bank stocks because those show the most promise today, and they've got nice consistent follow through. So I'm going to have Morgan Stanley highlighted again as my pick of the day. You can see how it's through that 200-day moving average. That's your support level. You can sell a bullish put spread. Actually, I recommended selling a bullish put spread on MS yesterday, and I suggested using that horizontal breakout there, selling the $41 put and buying the 40.50, doing that for a 10-cent credit. So that's a nice trade, and I think I'm going to leave it on that note. The main thing that I wanted to emphasize today was how to leg out of a bullish put spread. So we don't have an issue with MS right now, but let's say that we did. Let's say that we put this bullish put spread on right here and that we were selling the 41, 40.50 bullish put spread. If the stock today had reversed and we took out that $41 support level, used to be resistance, now it's support. If that support level had been breached at $41, we know that the underlying premise to our trade was flawed, that $41 support level had failed, and that now the selling could accelerate because anyone who bought that breakout would now be selling and heading for the sidelines, and they would be flushed out of the trade, and that's what gives the stock more downside momentum. So you buy in your $41 put, you look at the market, you see that it's selling off, and it's below the prior day's low. That's when you start legging out of that spread. You buy the 41 put back in, you put a target out there for the 40.50 put, hopefully at the same price that you bought the $41 put for. That way you still get to keep the credit that you put the spread on for if you're able to attain that price. If not, just look to get out of that trade as soon as that market momentum wanes and you get down to the low of the day and you get a bounce off of it. Whatever you've gotten out of the stock at that point, you got to be pretty happy with. You just have to exit it, clean the slate, move on. I don't leg out of spreads a lot of times because I don't have both factors working in my favor. I must have the stock working in my favor. I must have the market working in my favor at the same time. So I hope that you found this lesson to be educational. I like bank stocks in here. I think they perform well. Look, the market is not turning back. We had a compression here. We're continuing to move higher. If you like this content, please give it a thumbs up. Make sure to subscribe to this YouTube channel and turn on your notifications so that you never miss these videos. Thanks again. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.